Assalamu alaikum friends. Welcome to lecture 5 of SBR. Today's standard is IAS 7, Statement of Cash Flow. This is one of the easiest standard to score marks because majority of it you have covered in your financial reporting, that is F7. What are we going to do here? Here we are going to do statement of cash flows for the group companies, group statement of cash flows. Okay, that's the only addition. Rest everything remains same. So here we are going to discuss from the exam's point of view how important this topic is. Then you need to classify cash flow, the pro forma, that's the standard, the format of statement of cash flow that one needs to know. Cash and cash equivalent, it's very important that you know the definition, okay? And how do you prepare consolidated statement of cash flow with foreign exchange and cash flow statements, because you can have subsidiaries overseas also. So you need to deal with exchange rates and all. And some other issues, which is basically discussion questions, because this question will also have discussion questions and it will be having marks to it. It's just not calculation. Okay. And from the exam's point of view, this question is very important. One needs to know this. Why? Because it will be tested in your question 1. If it comes, it does not come all the time, but if it comes sometimes. Okay, it has a pattern of coming. You cannot say, but not all the sitting. If it comes, it will come in question number 1, and question number 1 is worth 30 marks. Okay, question 1 is 30 marks, and question 1 is always group accounting questions. You'll be getting consolidated financial statements. You'll be getting, it could be anything: statement of profit and loss, statement of financial position, uh, or even the statement of cash flow, because that is also a part of financial statements, right? But consolidated, so it will be tested. And but in your exam, this is SBR, this is a professional level paper, not your financial reporting. How in financial reporting you have been asked to prepare a full consolidated statement. Here you will not be asked like that. Then what will you be asked? Instead, you will be asked to prepare extracts, just some part, maybe just, investing activity, operating activity, extras, and you have to explain those accounting numbers. You have to be in a position to explain those accounting numbers. Okay. So let's start with the classification of cash flow. Cash flows are divided into 3 headings: operating, investing, financing. Operating means all your main activity, that is your trading activity, okay, through which you earn. Investing means you are investing, okay, you are buying or you are selling long-term assets or other investments. But remember, cash equivalent does not come here, excluding cash equivalent. And financing is how you finance, by taking loan, by taking equity shares, how. Okay, it's like based on equity and borrowings. We have a list of things which will go in operating, investing, financing, don't worry. Okay, but classification is very important. You cannot incorrectly put operating activity stuff into investing, or investing into financing, or financing into operating or investing. No, it has to be put under current heading. So let's start with cash flow from operating activity in detail. Okay, the main thing, most of the time examiner focuses on this area compared to investing and financing. The main thing is in operating activity. Okay, so the key figure is cash generated from operation. Most of the time if a question is asked on this topic, they ask you to calculate cash generated from operation and explain it. Now there are 2 methods to calculate that. This you know even from your financial reporting also. It's nothing new. First is known as direct method. Second is indirect method. Direct method means whatever the cash you receive, you deduct with the payment. That means whatever you receive from your customer, deduct what you pay to your creditor, and also what you pay salary to your employees and all. Indirect method means you start with the profit before tax and you adjust that profit figure to cash. You convert your profit to cash. And most of the time in the exam, it is the indirect method that you have to do. You start with profit before tax, adjust it with all non-cash items. For example, depreciation is a non-cash item. You add it back. Okay, profit and loss. Profit you deduct, loss you add back. Okay. Then we are moving on to indirect activity. Okay. So indirect activity has to be is usually done by having this adjustments. What are those adjustments? Let's see. finance cost and investment incomes. You'll be given some cost and some incomes. Okay, you have to do adjustments accordingly. We'll see those adjustments. Then depreciation and amortization. You have to add, because when you were calculating the profit, they were deducted. Just now do the opposite. They are non-cash items, so it needs to be added back to the profit because you want to convert the profit to cash. That's what you are doing through indirect method. Impairment. Okay, all this account, the amount you will get it from your statement of profit and loss. Depreciation, amortization, impairment, finance cost, investment income, right? Impairment, added back. Profit and loss on disposal of non-current assets. If it's a profit, you deduct. If it's a loss, you add back. Basically, whatever you deducted to get the profit, you add back. Whatever you added to get the profit, now you deduct. It's just the opposite you do. Changes in inventories, changes in trade receivables, and changes in trade payables. Basically, inventories, receivables, and payables is known as what? Working capital. So changes in your working capital. Okay, I don't think this is something which is very new. You must be very familiar with this. So I can quickly go to the next. This is the difference. On your left hand side, you can see direct. Right hand side, you can see indirect method. The two methods, the way it is calculated, starting point is different. But at the end, just check the result. Cash generated from operation is same under both the method, and it has to be. Now in the exam, don't be fooled to do both the methods and check whether it's correct or not. You don't have that much of time. Okay, mostly it is the indirect method. I've not seen a question where you had to do direct method, but be prepared for it because in the exam it could be asked. Direct method is easier. Okay, indirect method usually they ask because that is the area where you have to do so many adjustments, and that's what examiner wants you to test. So let's start with the direct method first, where you start with cash receipt from customer, you deduct cash payment to supplier and also your cash payment to employees and other cash payment deduct. So receipt minus payment. That's the simple idea, direct. Okay. Indirect method, profit before tax. With that you add depreciation. If inventory increases, you deduct. Why? Because increase in inventory means your cash is going out. To buy inventory, that's how inventory is increasing. No, you have to pay cash. Increase in receivable is also a deduction. Why? That means now your customer is taking longer time to pay. They're not paying. That's why receivable is going up, which is not good. It's a cash outflow. Increase in payable is good and bad also, but let's see the good. It's an inflow because now you are taking more time to pay your payables. That means cash is with you in the hand. So cash is going up. You understanding? Now let us go through the other two activities. Investing activity is the second cash flow from investing activity, the second classification. Here, basically what you paid in cash to buy your property, plant, equipment, or any other non-current assets. Okay. Also, the cash received is just not the payment. Sometimes you might sell the non-current asset and receive the cash. That is also under investing activity. Then, any cash that is paid for investments, if you are making any investment or loan to other entities, that is under investing activity. But remember, any loans from financial institutions, from banks you are taking, that is not here under investing activities. It is excluded. It is shown under financing. If you are taking a loan, bank loan for example, it is under financing activity, not investing. But if you are taking that loan from other entity or giving loan to other entities, for example to your subsidiary, to your associate, then it comes under investing activity. Same way for cash received for selling the investment. Here also, if you are receiving the loan, or it's excluded. Now let us go to the financing activity. Okay, in the financing activity, basically how you finance, by using loan, by using equity, right? So here it includes receipts that you get from issuing shares or other equity instruments, or receipts that you get by having debenture, loan, notes, bonds, all long-term and short-term borrowings you can take. But in this, overdraft is excluded. Overdraft does not come as financing activity. Instead, overdraft is included in cash and cash equivalent. We'll see. We'll do a question. We have so many questions here. Don't worry. Okay. So don't take overdraft under financing activity. Then payments. Okay. Wait. Okay. IAS 7 says financing cash outflows include these things. These are outflows. The previous two was inflow. Outflow is what? If you are repaying the amount of the loan, cash is going out, it's an outflow. But not overdraft. Remember, overdraft is not part of financing activity. If you are making a capital element of lease payment, capital payment element of lease payment is an outflow, and payment to reacquire or redeem the entity's share, that is also an outflow. Okay. Now, interest and dividends. Interest and dividend has a very interesting feature. It can come in all the three. Let's see how. Okay. And once you include it under one heading, remember every year you have to be consistent with that classification. You cannot change. For example, this year interest paid in operating, next year under investing. You cannot do that. You have to be consistent. So let's start. If it's an interest received, remember you have to memorize these things. Basically SBR is very easy because it's like a rule book. You just know the rule and apply it. That's it. So a lot of memorization is required in this subject. Okay. So if it's an interest received, it's under investing activity. If it's interest paid, it is operating activity. You see, it's different. Even though it's interest, but if it's received, it's under investing. If it's paid, under operating. And if it's dividend received, investing, and dividend paid, financing. Okay. How do you memorize this? Easiest way I will tell you. See whether it is interest or dividend. If it is received, both are under investing activity. You memorize it like this. Interest paid, normally you know it is under operating activity. From before, you know, you deduct interest and paid. You deduct interest and tax, remember, from operating activity. So the only thing you have to remember is dividend paid. It is under financing. Dividend paid, financing activity. That's it. Okay. Now, let us go to the pro forma. Because when you prepare, you have to know the pro forma, where you start, what you add, what you deduct. So let's start with profit before tax. You have to label it. When you're making it, you have to write consolidated statement of cash flow for the year ended this. You'll be doing it in Excel. Cash flow from operating activity. First topic is that. Then you start with profit before tax, will be given to you. Then you do your adjustments. Everything is given to you. You have to do the adjustments. There are some area you need to do workings. Okay, remember that. Not everything will be given easily and just put it and just no. Reconcile opening and closing cash balance. It's not like that. You cannot reconcile sometimes. You don't know whether it's correct or not, because I told you extracts only you have to prepare, not the whole consolidated statement of cash flow. Okay. So you start with profit before tax, finance cost you add back, investment income you deduct. See, all income you deduct, cost you add. That's it. That is the rule. If you remember this, okay. So finance cost add, investment income deduct, income from associate, we'll go to that later. Okay, this comes in group accounting questions, associate and subsidiaries and all. This is something new for you, because when you were in financial reporting, you were doing individual cash flow statement. Here you are doing group accounting statement of cash flow. Little differences is there, but it's not very difficult. So income from associate. Do you know what is an associate? You must know, right? Associate is an entity where firm has an influence, not a control. That means between 20 to 49%. So you cannot take it as a group. Okay, it is outside the group you take. But if you receive any income from them, you deduct it. Then you start adding for operating the non-cash items like depreciation, add. When you are selling subsidiary is a part of your company, it's a group, right? Where you are having more than 50% ownership, shares, right? So when you're having a profit, by disposing that subsidiary, deduct. If it's a loss, add. If it's an impairment, add. Loss on disposal of non-current assets, add. Increase in provision, add. Okay. Then we are moving on to changes in working. Still we are under operating activity. Changes, because I was not able to put everything in one page. Okay. So I had to go to the next. Changes in working capital. Okay. There are only three things: inventory, receivable, payable. You have to see whether receivable, inventory, payables are increasing or decreasing, because based on that only it will be an outflow or an inflow. If it's an outflow, with bracket, inflow without bracket, it's a positive figure, right? So inventory, receivable, if both of this increase, outflow. And if payables decrease, it's an inflow. It's an outflow, sorry. That means you are paying your creditors now. That's why payables are decreasing. So cash is going out, it's a cash outflow. Then the term that is known as cash generated from operation. Please do not get confused between these two things. One is known as cash generated from operation. The other one is known as net cash inflow or outflow from operating activity, which is in bold. If the question asks cash generated from operation, do not deduct your interest and tax. But if the question asks cash inflow from operating activity, then only deduct interest and tax. Okay, many students get confused in this area. It's a small thing, but they make silly mistakes. Okay, so once you deduct interest and tax from your cash generated, you get net cash inflow or an outflow. It could be an outflow also. Okay, if it's an inflow, it's good. Outflow is not good. I mean, it's your main activity, right? Next, we are going to investing activity. Investing activity is pretty easy. Okay, investing and financing is pretty easy compared to operating. Operating is the one where the majority of the work is required, and that is only the area where most of the time examiners ask questions from. They don't worry so much about investing and financing. Okay, so investing, if you are making a payment to purchase non-current asset, it's an outflow. Deduction. Receipt by selling, addition, add back. The problem is not the problem. The new thing is in associate and subsidiary. So when you are paying a cash to acquire the subsidiary, right? It's an outflow. That is there under investing activity. And if you are getting the cash receipt by selling subsidiary, it's an addition. Same way, when you are paying cash to acquire associate, deduct. Okay. Interest received, earlier slide we told interest received or dividend received is under investing activity. Okay. Then what is known as net cash inflow or an outflow from investing activity. Next, we are moving on to the last, that is financing activity. Here, all shares and equity and loans, all those things will come. So when you are getting proceeds from share issue, inflow. Proceeds from loan is also an inflow. Cash repayment, you are paying cash to repay the loan or debenture, outflow. Outflow, see, whenever I say outflow, you will see it in bracket, okay? That means you have to deduct. That is the meaning of outflow. Inflow is without bracket. Lease liability repayment, outflow. Equity dividend paid by the parent, again outflow. And dividend paid to NCI, non-controlling interest, comes under financing activity, deducted. There are two. Dividend received, yes, under investing, but dividend paid to NCI under financing activity. Okay. Then check the last three. Once you add your operating, investing, financing activity, then what is known as increase or decrease in cash and cash equivalent. If it's an inflow, that means cash has increased. If it's an outflow, that means in bracket cash decreased. Now with that you add your opening cash and cash equivalent, opening balance. This opening balance you will get it in your statement of financial position. They will give you two years statement of financial position. And then the closing balance that you get has to be equal to the closing balance that is given to you in the statement of financial position. Then we know that statement of cash flow is correct. We are reconciling the opening with the closing balance. But unfortunately in SBR, you don't have to reach till this stage. Most of the time, no. You don't have to. You stop in operating activities only. So you don't know whether it's correct or not. Okay, that's why you need to be very careful. So cash and cash equivalent. Now, you need to know what is included in this and what is not included, because sometimes you might include wrong stuff in cash and cash equivalent. Okay. So now, statement of cash flow is basically for reconciling the opening with the closing cash balance. Okay. Cash equivalent, please know the definition. You don't have to write the definition in the exam, but you have to know this definition to identify the correct cash and cash equivalent. It is short-term, highly liquid investment that you can convert to cash anytime. And the risk of changes in value is very insignificant, very small. If it fulfills all these conditions, I have highlighted it in bold for a reason, then it's cash equivalent. Okay. And how do you say it's short term? I mean, they do not define what is exactly short term. Okay, but usually short term means short maturity, like you can take 3 months or less than that from the date of accusation. Okay, that whatever investment, okay, is there, 3 months or less than that, you can take it as a short term. If it's more than 3 months, it does not come as a cash and cash equivalent because it's not long term. Then it's not short term, it becomes long term. Then what are the things excluded? Equity investments. If you're having equity investment, they're excluded. They cannot be part of cash equivalent. Why? Because equity investment, there's a significant risk of changes in value. But when it comes to preference share, okay, which has a short period to maturity, and it has a specified redemption date also, that this is the time it is going to be redeemed, then it can be taken as cash and cash equivalent according to IAS 7. Now let us do a small question to see what is cash and cash equivalent. We'll identify from the list. So let's do. So now we are going to do test your understanding 2. Test your understanding 1 I've not done. Okay, you can read it on your own if you want. I'm not going to do all the questions which is there, it's not possible. But some main questions which is very, very important for you, I do it, right? I'll be doing it. But the ones which I missed out, which I didn't do, it does not mean they are not important, but there's something which can be skipped. And if you want to do it, if you still want to give it a try, you can do it on your own. So let's start. There are 3 scenarios and you need to identify whether it's in cash or a cash equivalent or not. First one is an overdraft. Okay, they are treated as cash and cash equivalent. So this is cash equivalent. I will write C next to it. We know that, right? Second and third is the challenge for you. Second one, a balance of $500,000 held in a high interest account. Minted must give 28 days notice in order to assess this money which held with the intention of meeting working capital shortages. Is it a cash or cash equivalent? See, before directly telling whether it's a cash and cash equivalent, you have to see how do you judge whether it's a cash and cash equivalent. You have to see whether it's short term. You have to see whether the risk is insignificant or not. Right? You have to see these things. The 3 months, okay? So if you see it's a 28 days notice is required, okay? And if you see this money is used to help short-term needs, working capital shortages are short-term needs, right? So you can include this also in the cash and cash equivalent because it's for short term. You can take it within 28 days notice, you can convert it into cash, which is less than 3 months. And also it's a short term for short term. And assuming that risk is not very significant, it will be taken as cash and cash equivalent, right? Next, third one, an investment in the ordinary share. The shares are listed. They can be sold immediately. Shares have a fair value of 1 million. Immediately you will know it is not cash or cash equivalent the moment you read the ordinary share, because we told equity, investment in equity, okay? So they do not, rather they fall under what? Investing activity. If you are making an investment in the ordinary shares of a company, they fall under investing activity rather than cash or cash equivalent, because shares cannot be cash equivalent. It is excluded equity, we told that. And also if you see, there is a significant risk that the value of the shares will change, isn't it? There is. So now we'll be going into the preparation of cash flow statements. So now we are going into the preparation of consolidated statement of cash flow. Okay. And the questions on this lecture will be done at the end of the video. That means after I finish all the discussion, all the theory parts, then we'll be doing just fully all questions. There are many questions we'll be doing. And then I'll be summarizing it, the whole lecture at the end. Okay. So a consolidated statement of cash flow, you need to know what it includes. Okay. A consolidated statement of cash flow shows the cash flow between a group and a third party. Okay. So any transactions with your subsidiary is not included in statement of cash flow. Why? Because they are part of a group. They are intra-group transactions. So you need to eliminate those things. Okay. Other than your subsidiary, if you are making transactions with associates or any other party, cash flows are included in the cash flow statement. Okay, and statement of cash flows are prepared using. You need the help of consolidated statement of financial position as well as the consolidated statement of profit or loss. This two will be given to you in the exam. Okay, using this two help, you can prepare statement of cash flow. Then when you're producing statement of cash flow, three extra elements are added. This is for consolidation purpose. Number one, acquisition and disposal of subsidiary. Second, cash paid to non-controlling interest, that is NCI, associates. These are the three areas that you need to work on. Okay, so now accusation of subsidiaries. Let's start with that. Acquisition and disposal of subsidiary. So when you acquire a subsidiary, any cash that you have paid to get it will be recorded under investing activity. Investing activity. Okay. But remember, you need to do one adjustment there. When you're taking cash that you are paying to buy the subsidiary, subsidiary must already have some cash, right, with it. They're already holding some cash. That when you buy the subsidiary, they also become part of your group. So that cash needs to be deducted from the cash that you are paying to buy the subsidiary. You will understand this through a question. Okay. Then regarding any assets and liabilities of the subsidiary, okay, you have to see what is the cash movement, whether it increased or decreased. For that, you need to do workings. Same for the disposal also, but it's the opposite now. Now it's cash received from selling the subsidiary. Needs to be there. And same assets and liabilities, working needs to be there. Then we are moving on to cash paid to non-controlling interest. Okay, for this, okay, any cash that is paid to NCI, okay, will be there in your statement of cash flow. Dividend paid to NCI, that is a cash only, right? Dividend paid to NCI is what? It is under financing activity. And how to calculate the dividend paid? To calculate that dividend paid, you have to make a T account. Okay, that means you will be given the opening NCI, the opening non-controlling interest balance. Okay, you have to reconcile that opening with the closing balance. Okay, then comes associate. For associate, okay, they have significant influence. I told you they are not part of a group, so any transactions with them is taken as a third party only. So you can report those cash flows in the statement of cash flow. Okay, any cash flow that is relating to associate has to be reported separately within the statement of cash flow as follows. Dividend received from associate will be there. Loans made to associate will be there. Cash payment to acquire associates will be there. Cash receipt from selling that subsidiary, all these four things will be there. And this cash flows will be under where? Which topic? Investing activity. All these four are under investing activity. So this makes your work easier. Next, you need to remember for associates, see, associates use equity method. We know that, right? If you don't know that, know it now. Anyway, when we go through associate IAS 28, you will know it better. That we use equity method, how equity method is done, how. But right now, you don't have to know that method. Okay, just know it is an equity method. That means in the consolidated statement of profit and loss, you record the associates share of profit. I mean, group records the group's share of associates profit for the year. What is the group's share of profit on the associates that they recorded? Okay, and if you see it's a profit, so it's a non-cash item, non-cash income. Okay, because it's a non-cash income, you have to deduct this non-cash income. Remember the adjustments that you are doing to get cash generated from operations in your operating activity from there. It's a non-cash item, like how you did add depreciation and amortization. Here you need to deduct this income from profit before tax. Now we are moving on to the last aspect, which is on calculation, because after that we have theory discussions only, which is other issues. This one is foreign exchange and cash flow statement. Okay, if you are getting any exchange gain and losses, because you might be having subsidiaries or associates in the foreign country. So there you have to deal with this exchange gain and losses when you're converting their currency to your home currency, the value of the assets and liability. What do? You have to take this into account when you want to calculate the actual cash payment and receipt. It can either have a gain or a loss, depending on increase and decrease. Now, overseas cash balance. What should you do with it? If your cash balances are in foreign currency, effect of exchange rate will come there. Okay? So you have to take that into account. We'll do a question. We'll see how it is done. Now, finally, other issues. So these are some other issues. Other issues means some problems. So we've started with the two methods, direct and indirect. Remember, direct and indirect method only have differences of presentation in the operating activity. Investing and financing activity will be same under both the methods. Okay, operating activity, only the way you start is different, but the answer will be same. But there are some issues. Number one issue is, because you are giving a choice to do direct or indirect, you cannot compare the two entity. Some might use direct, some might use indirect method. It's difficult to compare. Second, not many will understand the adjustments that you do the profit before tax that you do using indirect method. And next issue is the disclosure. Okay, because some current cash flow disclosures are not so adequate, and if there's a lack of disclosure, okay, there's a lack of disclosure most of the time. What is the entity's ability to use its cash and cash equivalent, especially if it's overseas? Okay, and whether other sources of finance would be more economical or not through disclosure, no one understands that. Is it only the cash that you have to rely on, or you have other sources? You cannot know. Then the third issue and the last issue, lack of guidance and disagreement. There is lack of guidance in IAS 7. Why? Because you are saying dividends and interest paid could be from operating or financing activity. Because interest paid is operating, dividend paid is financing activity. So again, comparability issue comes. Second, entities can classify cash flow that is relating to the same transaction in different ways. Two entities can classify the same transactions cash flow in two different ways. Okay, so again, understanding, user might not understand this thing, why it's two different ways. So comparing becomes very difficult again. For example, if you take a loan has a principal amount and an interest amount. Principal amount is in the financing, interest paid is in the operating activity. So do you think it makes a sense? I mean, it's just one loan, one element and two separate places. Then there are disagreements regarding the presentation of lease payment, because some say it has to be it has to be classified as financing activity, whereas some say it's a form of investment activity. So there's a debate going on between the classification. And expenditure on research, they say it has to be classified as operating activity. Some might say it should go under investing activity because it is regarding future income and cash flow. Again, debate is going there. Okay, so that's it. And for this lecture, now we'll be only focusing on the questions before I summarize this lecture. So let us do. Test your understanding 6, AH group. So you have been given the consolidated statement of profit and loss, and you have been given the extract from the statement of financial position with comparatives. Usually when they give you the statement of cash flow, like for the statement of cash flow questions, they will give you comparatives like that. Okay, otherwise how will you know the opening and the closing balance? Now let us read the notes. Okay, so the most important area is your notes, because this is the area where you have to do the workings. Okay, and since this is your first question in this lecture, and also I think I've not done any intensive calculation question in SBR before this, so I'll be doing this question in the OneNote manually. And next, which is test understanding 7, this is also similar question to this, but it's more bigger. I'll be doing it on Excel on your CB platform, right? So on 1st of Jan 2005, date is very important when it comes to accusation for the consolidation purpose. 1st of Jan 2005, AH acquired 75% of the equity shares of CJ for 6 million. This is the accusation price. Okay, we have not done a consolidated question, but from your understanding of financial reporting, you should be able to solve this. Net asset is given and all are at fair values. Okay, they have been given property, inventory, receivable, cash, payable, and tax has been given. So which is 5,000. Now, goodwill relating to the accusation was calculated on a full goodwill basis. Okay, do you know what is full goodwill and partial goodwill? Since we have not done that standard yet, we have not reached upon consolidation. Okay, we have just finished IAS 1 and 2 and this is IAS 7, but we have done it in financial reporting, so this is an assumed knowledge that you should know. Full goodwill basis means you are measuring it based on your NCI. Fair value of NCI is given and based on that you are measuring goodwill. Partial means you are taking the net asset. I mean the proportionate share of the net asset. Okay, fair value of NCI is given. Any impairment of goodwill has been accounted for within operating expenses. Now, during the year, so first we'll read all the notes and then I will tell you how to proceed this question, how to approach this question. Okay, so that this becomes very easy because there are lots of things, looks very difficult. How do I break down? You need to break down this big piece of information into small chunks and I have to attempt this question. During the year, AH disposed of this property, plant and equipment and proceeds for 2.25 million. Carrying amount of the asset is 1 million. Depreciation is 7.9 million. Okay. Now you are requirement. Please read the requirement very carefully. It is not net cash inflow. They told prepare cash generator from operation using indirect method. Here they have told. In the exam they will not even tell that. Okay, and part B. But this is a very standard, I mean exam style question. Even in your exam, if you go through the past paper, you will see this is the way a question is asked from IAS 7. First is calculation, second part is the discussion. So explain the reasons behind the adjustments made to the profit before tax in part A. Okay, you definitely have to do part A before doing part B. I will show you both. I'll be doing both of this. Okay, so there are how many things are there? Two. One is regarding goodwill, the other one is regarding disposal of property, plant and equipment. So now, how do you approach this question? If I ask you this question, you have been told which method to do. How do you do this? Profit before tax. Look your profit before tax, isn't it? That is the starting point. This is indirect method. So we are going to go through profit before tax. And where will you get this profit before tax? You have to know the places where you're going to get this information. Statement of profit and loss. Statement of profit and loss. So let's start. And you have to do this with me, right? So while I'm doing this on the screen, you have to do it on your own writing because this is how you learn. I'm going to drop down 3 zeros. Okay, so that I just have to deal in thousands, not millions. Now, this is the profit. This profit you have to pick out. I'm going to circle the amounts which I'm taking. Okay, this will make it easier for you. It's not profit for the period. Don't take it because it is adjusted after deducting tax. You have to take before tax. And yeah, before tax, 18,450. Do not take the other one also. What is it? Profit from operation. No, it's profit before tax. So you are going to write it 18,450. What is the next? Finance cost. Finance cost you have to add or deduct. You have to add because it has been deducted. What is it? This 1,400. So it was deducted. You can see it's in bracket now added. So you're going backwards. Okay, after that, what is it? Think. See, here you don't have to fix a method. Anything you can do in any order. Okay. If you see this table, okay, there are three things which you know, that is working capital: changes in inventory, changes in receivable, and changes in payable. Okay, so now you have to take your other notes into account. Okay, one is, okay, your goodwill impairment. Okay, impairment of goodwill. Other one, okay, so goodwill impairment is one that you have to do a working for. I'm making a note of it. Second, what is it? You're disposing property, plant, and equipment. So a profit or a loss. Okay, profit or a loss on disposal. That is the second thing which is required there in the adjustment. And what is next? What is it? Even the depreciation. Depreciation. Okay, this 7,950,000. So depreciation as it is, you can take and adjust it. It's a non-cash item. You don't have to do any adjustment. Okay, 7,950. Since I'm dropping down the 3 zeros. So now let us work on the you can work on the easiest things first. It's up to you, or you can go in the order. First with goodwill. I will prefer going with the profit and loss on disposal because this is easy. You just need to compare your proceed with the carrying amount. Proceed is 2,250,000 if you see, and the carrying amount is 1 million. So you are selling more than your carrying amount. It's a profit. Okay, so profit on disposal of property. Profit on disposal. It is 2,250,000 minus 1 million. So profit you will add or you will deduct? You will deduct, which is 1,250. Because these are quite easy. Okay, see, easy things where workings are not required, directly you can get it, do it first. Now we are going to have goodwill impairment. Just okay. Good. But whenever a working is required, make sure next to it you reference it that this is working 1. In this case you are lucky because you only have 1 working for goodwill impairment. That's it. What am I going to do? Am I going to start the working right after under this? Don't never do that. You have to leave a lot of space until you finish your cash generated from operation, and after your final table you can do your workings. Okay, so leave it. Leave one space and then other stuff do the adjustment. For example, trade receivable, inventory, and trade payable. These are the only 3 things which is left. So we'll see. We'll go here and we'll see what is the thing. But since this is a consolidated, we already have some inventory here. We have receivable here and we have payable here. So you have to take this 3 into account as well. Okay. How do you do that? First, let's see. For inventory, we'll start with inventory because that is the first thing which is given. Okay. So inventory, if you see, this is 2004. Inventory from here to here, it increased. There's an increase in inventory. Find the difference and see what is the increase. So increase in inventory is an outflow and an inflow. Outflow. Trade payable also, if you say it increased, inflow and an outflow. Outflow. Because customers will take more time to pay. Right? And trade payable, if you see, it increased. It increased means you are taking more time to pay your this thing. So it's a decrease. Inflow. Okay. But this is not it. We have some adjustments here. We have inventory, trade receivable, what we have to do? This is an accusation. You have to think whether it's an accusation or a disposal. So for trade receivable, what are you going to do? Find the difference between 33,500 minus 28,750. Okay, the difference between this two, that means how much is the increase in inventory. After that, go here 1,650, take this also and deduct it from here. You need to deduct. It's an accusation. So accusation means what? You are buying that inventory. That inventory also comes in your control now. That subsidiary is net asset, whatever at the date of acquisition, whatever the assets they have, inventory is now you are taking over it. So your asset is increasing. So you have to deduct it. It's an outflow for you. You are buying it. So deduct it. Minus. That's why whenever it's an accusation, it's minus. Whenever it's a disposal, it's an addition. That is the easiest way for you to remember. Okay. Same way for receivable. You check the difference 27,130, 26,300 and minus the trade receivable which is 1,300. Maybe the increase might turn into decrease or decrease might turn into increase after taking this into account. And for payable also check the difference. Okay, you check this difference and write an answer. Minus trade payable is down. This 1,950, we need to deduct it from here. This should be the always the way you calculate. This is the way always. Okay, now the amount I'm going to write here. You must have done your calculation. Okay, so inventory increased. Okay, I'm just going to show an arrow. Increase in inventories. But you have to write it. Okay, how much inventory increased? Usually when you do it, you can show it here, right under this only, what you deducted. But since I've done it there, I'm not going to repeat it here. Just tell me the answer, the figure. Figure is 3,100. And make sure that you get this figure. It's deduction because increased. Then for receivable, we told it increased, but because after you deducted 1,300, there's a decrease in inventory. Sorry, trade receivable. How much? 470. Decrease means customers are paying now, so it's an inflow. 470 add. Then we are coming to trade payable. There's a decrease in trade payable now after you deducted net asset of subsidiary. Decrease means you are paying your creditor now, so it's an outflow. How much? 1,420. So we have almost all the answer, and the answer that you are finally going to get is known as cash generated from operation. That's what the requirement asked you. So there is only one element that you have to do, that is goodwill impairment. Working for it. But remember, sometimes to do one working, you might need a sub working. You know, you can say 1.1 or 1.8. So let's do the working right now under this. You have to label it when you're doing working itself. Working, what are you doing? Label, write the number and also the name. If you just write working 1, 2, 3, we don't know. Sometimes if there are more than one working, you might not know what is it for. You don't know what is 1 is for, 2 is for, 3 is for. So let us do working 1 as goodwill. Okay, now I'm going to drop down the 3 zeros as usual even in the working. Brought forward balance, you can get it from the statement of financial position and the closing balance. I will keep some space. Okay, so brought forward and carrying forward. Let's go to the statement of financial position and see goodwill here. This is your opening balance, 4160, 5910 is your closing balance. I told you direct figures you can automatically write, leaving some space. So it is 4160, 5910. That is the closing balance. Now what is it? How much goodwill you have acquired on subsidiary? When you have acquired the subsidiary, that time also you will be having some goodwill. Do you know that goodwill? You don't know. You have to calculate that. That's why we need a separate working to for it. Space. And what is left? Impairment. Impairment you have to deduct if goodwill impairment is there. This is a balancing figure. Sometimes you might not have this. Remember, if you don't have any balancing figure, that means there's no impairment in goodwill. But since in this case there's a balancing figure, okay, then there's an impairment. But before impairment, first we have to find the goodwill on this one. So working to, I will do down, or you can do it cross also. Okay, you can do downwards or across. So I will do it downwards. Working to goodwill. Don't write goodwill, it's very confusing. On accusation. Okay, this is how you calculate goodwill on accusation. This I will be explaining you in detail again when we do a consolidation. But for statement of cash flow, you need this. Okay, you start with the consideration. See, this is an assumed knowledge from your financial reporting, but in this case, I'm explaining you again because you must have given financial reporting long back, and you must have forgotten it also. So you start with the consideration. That means how much amount you paid to buy that accusation. With that, they already told you goodwill is calculated using full goodwill method. They didn't tell you the amount. Full goodwill method means you should always take fair value of NCI. They will give you the fair value of NCI. Okay, which has to be added. This is the fixed method, okay, this method. Then you need to deduct fair value of net assets at accusation. And after that, what you get is known as goodwill at accusation, which we are looking for. Okay, all the three figures are given. Consideration is given, fair value of NCI is given, fair value of net asset is given. Let's see. Consideration will be given in the other information. They told here you bought it for 6 million. 6 million is the consideration. Net asset fair value is 5 million. And what is net NCI? NCI is 1,750,000 here. So everything is given. Now just fill it. 6,000, 5,000 you deduct, 1,750, add. After that you get 2,750. This 2,750, okay, now we'll go here and put it with the opening balance. This is how you need it always. So if you add 4,160 and 2,750, you will see there's a difference that is not as equal to the closing balance. Your closing balance is even less than that. That's why there's an impairment. It reduced by that impairment. Impairment is 1,000. Balancing figure. Okay. So this 1,000, you go and put it here. Needs to be added. Needs to be added. So once you do all your addition, deduction and all from profit before tax, what you get as cash generated from operation is equal to 23,500. This is the amount. Keep this calculation with you. We are over with part A. Now let us go to part B and start discussing. I'm not writing the whole sentence and waste your time. You can read the answers on your own. It's given there at the end of the chapter in your textbook. I will just give you the brief points and tell you how to proceed a theory question, discussion question. Okay. So I will go. I will write sideways so the numbers are there. Part B, profit adjustments. Whenever you do a discussion question, any question in as ACCA, in fact, always write in paragraphs with appropriate subheading. Sometimes you might not put subheading, that's fine. But you have to write it in different paragraphs, 1.1 paragraph. Okay. If you're writing 5 points, there'll be 5 different paragraphs. And that one point only you're explaining, elaborating on it. That's why you see one paragraph has to be can be around 1 to 5 or 1 to 6 lines. Do not exceed that. And you cannot explain also so much. Do not explain 1 or 2 points so much. Rather explain 4-5 points. Even though it's briefly you're explaining. That is a better approach. So here they told profit adjustments. Okay. Explain the reasons behind the adjustment. Take different figure and explain. Okay, think, see the figure, see where the adjustments are made and why that adjustment is made, and tell me how many points can you think of. I will give you 1 minute. See, I will tell you one thing. IS 7, okay, IS 7 says that whenever you're using an indirect method, you have to make adjustments to the profit. What are those adjustments like? Which area? I will write the areas. One is changes in working capital. Second is non-cash items. Third is what? What is third? Items which relate to investing or financing. So under these three scenarios, you make adjustments. So you see if any of this adjustments that you have made comes under this three category, you have to make adjustments. Okay. So what is the easiest thing? Easiest thing is, let's start with depreciation. Okay. One is depreciation. I will tell you the reason. One paragraph is contributed to depreciation under this. Depreciation and another thing. See, whenever you can write similar things together in one paragraph, aggregate and write rather than write in two separate paragraphs. Aggregate. What is with depreciation? What can you aggregate? Impairment loss. Depreciation and impairment loss. Goodwill impairment. Why? What is the characteristics that they have? Both are non-cash. Both are non-cash item. That's why you're doing adjustments. So you can explain this. They are non-cash. That's why they added back to the profit. You can write it. So one thing is over. Second paragraph, what can you write? Profit. Profit on disposal. That is the adjustments we are doing, right? Profit on disposal. What can you write for profit on disposal? Profit is also a non-cash item, but this is little different compared to goodwill. That's why you didn't include it in that paragraph. Non-cash. One is non-cash. The other thing, the proceeds that you get from this thing, where should it be recorded? Proceeds of disposal is recorded under investing activity. You see, investing activity. So you add back the profit, you deduct the profit and eliminate it from the operating activity. Okay, you deduct this from profit before tax and eliminate it from the operating activity. Next, you can go by this order also. 1, 2, 3, 4 and 5. Inventory, payable and receivable comes in 1. So many paragraphs could be there. Finance cost is 1. Why finance cost? You have added it, right? Why? It's a non-cash item. Non-cash item. It's not a cash flow. Why? Because they are accounted for accrual basis, if you see, not on a cash basis. It's an expense, no? It's done on an accrual basis. So you cannot say it's a cash flow. That's why you add it back to eliminate it. Eliminate it in the sense of eliminate it from the profit figure. Okay? And then if you are paying any cash interest paid, you later deduct it from cash generated from operation. Okay? But that thing, it's okay if you write it, don't write it, it's not a thing. Then what we have? Last but not the least, working capital. In your working capital, all your inventory, receivable, payable will come. You have to talk about all those three things. This is easy, right? That is a non-cash item. They buy or sell on credit. Okay, so that's why only cash receipt and cash payment should be recorded. So you adjust it to eliminate the accrual impact. Okay, that you can write. And also you can talk about that where you have acquired the subsidiary. Accusation of subsidiary. Right? Because some of the working capital movement includes that also. Relates to the accusation of subsidiary. Rather than cash flow with your customer or the supplier. So that effect of accusation has been eliminated. So you reduce the impact, you eliminate the impact of accusation. That's why you take this also. So I'm sure, so there'll be four paragraphs, okay? So I'm hoping that after this, now you will be in a better position to write any question, any discussion question in SBR. Okay. Now let us go to test your understanding 7, which I'll be doing it in Excel. Similar question to this, but it's more lengthier and it does not have any discussion, only calculation, because discussion question you can just write it in the word processor, which I don't think I've typed it and show you how to do it. That you can do it. Test your understanding 7. This I'll be doing it in Excel, but I will not be having the questions with me right there. So you make sure that you have this question in front of you while I'll be doing it on Excel. Okay. So you have been given the consolidated statement of financial position, and you have seen this is very similar to your test understanding 6 for the 2 years. You'll be given like this only. But here you are given more items. Under non-current assets, you have investment in associate here, right? Then you have cash and cash equivalent here. You have share capital, retained earnings, other reserves, NCI. Then under non-current liabilities, there are so many. Deferred tax. Then you have been given the statement of profit and loss. Okay, you have been given other comprehensive income, share of profit of associate, other comprehensive income from associate as well. Okay, and consolidated statement of changes in equity. This is something new which was not there in the previous. And you have been given the notes. Okay, so in the first note, it is regarding, even if I don't read the whole thing, the moment I read the depreciation, I know it is about plant, non-current asset only. So depreciation has been given as 385,000. Carrying amount is 250, sold at 275. Gain is under operating cost. Certain properties were revalued and revaluation gain is 200,000. Okay, see under one point they will give about one item only. So this is about plant. All profit regarding plant, depreciation regarding plant, revaluation regarding plant, everything is under one. 2. Okay, they have acquired 80%. That means NCI is 20%. Fair value of NCI has been given as 340,000. Consideration has been given as 1.5 million. And fair value of net asset is 1,490. 3. They have acquired another company which is at 60%. You tell me whether the second and the third, they are subsidiary or not. They are, both are subsidiary because more than 50%. Okay, sorry, here they didn't acquire, I'm sorry, this is disposed 60%. So that means first they have 80%, from there they disposed 60%. That means they are only left with 20%. They no longer are a subsidiary, they became an associate. So from subsidiary to associate. Interesting. For cash proceed of 850,000. But long time ago, this subsidiary was acquired for cash 600,000. NCI was 320,000 at accusation. Fair value of net asset was 730. Goodwill did not suffer any impairment. See, the moment they say did not suffer any impairment, there is no, don't waste your time to calculate impairment for goodwill. That means there is no impairment. And they have been given you the net asset also, 980. Now prepare the consolidated statement of cash flow. This is a full consolidated statement of cash flow, but in your actual exam, they will not give you this lengthy, this full consolidated statement of cash flow for a question. No, they will only give you like test understanding 6 only, extracts. But it's very important to do this question fully so that you understand all the aspect of associate, of subsidiary, of accusation, of disposal, of goodwill, of NCI, everything, all the consolidation stuff you need to know. That's the reason we are going to do this. So let's do it. You open your, log into your ACCA website, open your CB practice, log in there. Okay, and let's do. So the moment you log into your ACCA practice platform, you will land out to this page and you have to go to SBR. From your right hand side under catalog, you'll be having all the subjects, your skill level F5 to P7. You'll be having all the subjects here. We want to choose strategic business reporting here. Okay, and we want to choose a blank workspace because we are not taking any past paper questions. And you need to assign it, and the moment you assign it, on your left hand side under self assigned material, you'll be seeing blank workspace. Click here. Okay, and you need to start. So the moment you start, okay, see any blank workspace for any paper looks like this the moment you open, because your actual exam looks like this. This is how a question will look like on a CB platform. Okay, let me first take you through all the tools. I've done it for AFM, but I'm doing it for SBR again, SBR now. They are with little differences. So you will be given requirement 1 here. All the requirements will be given. Right? You'll be given multiple requirements. Requirement 1, 2, 3, and this is how you'll be having different exhibits. This is empty now, but just you can open up any past paper and see how it looks like. You'll be given various exhibits 1, 2, 3, 4, and this are your response options. Word processor, where you can type your discussion questions, and spreadsheet will be used for calculation. Totally. Here basically they give you the background information. Okay, so here first we'll go through all this, what is there on this symbol. You can click on the symbol. We have 5 different symbols: dollar, euro, pounds, yen and peso. If you click here and insert, you will get the symbol. You can highlight certain text if you want to by changing this different. For example, now it's yellow, you can say it's yellow here. I will show you. Let's say you want to highlight this. So you see, you can remove this highlight or change the color also. Remove highlight. Strike through. If you want, just click and strike through. It will cut the word for you. You can remove it also. Then we have a calculator inbuilt there for you, for which you do not have to carry a manual calculator any longer. It's the same as the others, right? And we have scratch pad. This scratch pad is basically like your rough papers. You can do your workings here because you do not want to touch your spreadsheet, Excel and use too much of it for all your unnecessary workings. Use here. Okay, and you can copy paste. Sometimes maybe let's say you want to copy paste, copy paste to different. For example, something from spreadsheet you want to copy in the word processor, something from word processor you might want to copy it in the spreadsheet. Okay, you can do it, but not all the time. There are some times you cannot copy paste. You just have to type it. If you cannot do that, do not break your head for it and try to find various ways to copy paste. This you should have done before in the practice session, not in the actual exam. Okay, make as many mistakes as you want on a CB platform while you are practicing, but not on the day of the exam. Okay, learn, make mistakes and learn. If you do not make mistakes, how will you know that this could be a mistake? This thing does not work. Make sure. So here we have help formula sheet like this. okay, which gives you, there are three things, workspace help. Through this, make sure that you read all these instructions. I'm not going to do it. Okay, here they tell you how the windows are, they tell you how to highlight and strike through. I've explained you all those things, how to copy paste, right? All the functions is there. You can reset entirely what you have written in WordPress if you want to do it. Make sure that you do not click anything if you do not know. Do not click. Do not take the address. What if everything gets deleted? That's why make sure that you read this. How to cut, copy, paste. You should know this. You can redo and undo. You can reset entirely. It's reset. Okay, if you click this, that means in the word processor, you click this. Where is that button? This one. I'll show you. You click this. You see, they will ask you this thing. Do you want to? Reset will make it entirely clean. You have to type it again. Everything gets erased off. Whatever you have saved. Okay, so before you click this, be very sure. All these things you should know. Okay. And this is common for all the papers. All the papers. If you read it for one paper, no, you don't have to read multiple times. That's the beauty of this. Okay. What are the response options? Even in Excel also is the similar. Not much difference, but in Excel you have functions also. That's the different thing. And you can format your currency, dates, number. That's additional stuff are there. Okay, and you have some functions. This we do not need for our SBR, but for other subjects like AFM, tax, we need. Like we have sum function, average function. Then we have power, count, square root, net present value, IRR. Now go to the formula sheet. You have been given formula sheet. This is basically helpful for your AFM and ATX. You do not need it for SBR. There's no formula as such. And exam instructions. See, there are some differences between this and your real exam. There are going to be. Some differences are there. Maybe the screen, the way it looks like is gray color. Maybe in the actual exam, it might be black color, white color, things like that. Some functions are not working here. They might work there. Some here it's working. There it might not work. Make sure you go through this. Okay, take your own sweet time, go through these, read all this. It's very important for you. Once should know this before you do any question here. You see differences. In your live exam, it will look like this when you highlight. Here it's in purple. Here it's gray. Here the screen looks like this gray, the dark gray. Here it's light gray. These are the differences between live CB exam and your practice session. Okay, so now let's close all those things and okay. You can open multiple windows. Okay, do like this: exhibit 3, exhibit 2, exhibit 1. Let's say you want all the three. You see, once you click here, you can also see the other screen. It is hidden behind this. So if you want to see all the screen at the same time, you can resize from here. Only down right side like this. You can see the small arrow like this. You can just resize all the time. You see, now you can see both the screen. This also you can resize only from that angle. Okay, the moment you want to close everything, you either close individually, close here, cross here, cross here one by one, or close all. Okay, now there is another feature. How do you go to the next question? It's very simple. You can click next. Here, because it's a blank workspace, it says end exam. This is the last, but you'll be having 4 questions in SBR. So the moment you press next, it will take you question 2, 3, 4 like that. Okay. The moment you click question 1, okay. So navigator, what is this navigator? Click here. Through navigator, you know whether you have attempted a question or not. Now this is a blank workspace, that's why they say attempted. But in your exam, or when you do a past paper also, it will say not attempted. The moment you click anything in the response option, it will say attempted. It will not see whether you have done it entirely or not, whether you have answered all requirements or not. The moment you do type anything, it will show attempted. But it's up to you. You know how much you have completed. Okay, there'll be 4 questions like this: 1, 2, 3, 4 for SBR. And this flag or review, the reason why it is used is, for example, let's say question 1 you have done and you were not able to complete entirely in the time given. So you quickly, what do? You go to question 2, leave question 1, let's say, and then after you have done all the paper, At the end, you have 15 minutes left. So those 15 minutes, you go back to question 1 and you'll be completing the things which you have not completed. You will now go and complete, right? But how do you know? Maybe by the end of the exam, you must have forgotten that in question 1 you have some things which are not completed. So for that reason, that you don't forget, if you are leaving anything incomplete, not doing a question entirely, you have to come back and revisit. Click here, flag and review. This red flag will tell you have to come here and do questions. It's not completed. Okay, you have to remove it. Okay, the moment you click, just clicking it on it again, it will become, the red will go, it will become white flag. White flag means you are safe, you are completed. Okay, navigate, it's the way you navigate. Okay, so here you go to the next, and you can do, for example, if you want to go back to a previous question, you see you cannot go back, there is no back button. They say end the exam. The moment you click here end the exam, they will ask you, you want to end the exam? Yes. You can even self mark your paper. I mean, while you are practicing, not in your live exam, come on. But here you cannot mark because this is a blank workspace. This is only used for you to write your answer. You don't have a question. For past paper questions, you can do that. But no, we don't want to end the exam. Okay, before ending the exam, always make sure, do you have any red flags? Is everything completed? Go back and check. Okay. So here question 1, 2, 3, 4. The moment you click on that particular question, you can go back to that question again. Let's say question 1, you want to go back. It will take you to that. So open your response options and see if that's completed or not. So now our focus is on spreadsheet because we are doing entirely questions on calculation. Okay. But we will be soon doing a question on word processor to show you how to make it presentable, how to make your answer presentable. Because remember, in SBR, any paper, not only the answer, the way you present matters a lot. And now it matters even more because you're 20 professional marks. Even though in SBR it is not applicable yet, but other papers it is there. Professional skill means how you present your answer matters a lot. The format that you're going to do it matters a lot. Okay. So now I hope you have the question test understanding 7 the pearls with you. Okay, you have been told to do the consolidated statement of cash flow. How do you start? Okay, so make sure that you first label it. Okay, we are going to write consolidated. In the Excel only you have to do it. Okay, why in Excel? You can do it in word process also, no harm. But it becomes too much. I mean, it will waste a lot of time because Excel will automatically perform the calculation for you. Whereas in word processor, if you go take the calculator, every time you keep entering here the big numbers and keep adding, deducting. Even if somewhere you go wrong, you will not be able to know it. But having it in Excel, there's a track, there's a formula. The moment you change one figure, automatically the answer will change. You don't have to worry. Okay. And here, if you go to word processor, make column, table, it's a waste of time. Already here we have the columns and the rows for you. Functions are there in build, so why not use Excel? Okay. So I'm going to take it to this one cell so that everything is in one column. I will make sure that this is bold. I told presentation, focus on that. Labeling is very important. Cash flow from operating activities. This things needs to be done first before you even start doing the calculation also. How long does it take? Not even 1 minute. This also I will make it bold. You can mention the year for the year ender or the name of the company or anything. Starting point, okay. Before that, okay, I'm going to drop down the three zeros. So how are you going to do that? Put the dollar sign. Okay, if you put 3 zeros, it will not show $3 because whether it's 10 zeros after 0, it is 0 only. So how do you do that? To make it 30, just make sure that after the dollar sign, put anything, any variable, any number. I will just put this one. Okay, fair enough. Center align. so that examiner knows that I have dropped down the 3 zeros. The moment you are dealing in millions, you either write the whole number, but if you're dropping down the 3 zeros, this has to be there. And usually I always recommend drop down 3 zeros and work on it. Smaller the number, the better it is for you to work also. With bigger numbers, it's very easy for you to get confused. You might write 5 zeros where you have to write 6 zeros. So it will make a huge impact, huge difference if you forget 1 zero also, or one additional zero if you add. So work in thousands. Starting point is profit before tax. This you will get from your statement of profit and loss. Okay, so that is your starting point. What is your profit before tax? I don't have the question with me. You have the question with you. Go to your statement of profit and loss and check. What is it? Profit before taxes 1115. Okay, now finance cost. Okay, right after profit before tax is good to take finance cost because that's the right after that. How much is the finance cost? Where will you get the finance cost from? Same place, statement of profit and loss, where you have got the profit and this thing, right? Just above it, 35. Add it. It's an addition, so just keep it plus. What's next? There are so many items that you have to do adjustments. Okay, so how do you decide? See, before, okay, just give me a minute. Before touching the notes, okay, this is the technique that I'm telling you that you can use for any consolidation question. Because there are so many places, you might take some figure from here, some from there, you might forget also some things. So in case that you don't miss out on anything, which I used to follow that time, until now I follow the same method, which makes me very confident that I've not missed any figure. Yes, always start with the things which is already there in the statement of profit and loss. For the adjustments that you require, first adjust those things, then go to the notes. And if you go to the notes, go in the order given. Requirement note 1, first you will adjust. Note 2, then comes note 3. Go in that order. In this way, you will not miss out on anything. Don't jump from here to here. That is one simple technique that will save you a lot in terms of marks as well as your effort also. Because you have to keep switching from here to there, under notes, then this place, that place, because everything is in different places. So if you see the next after finance cost, what is the next? Tell me. First, revenue, operating expenses, profit from operation, gain on disposal of subsidiary. That is the next item. Okay, so profit on disposal of subsidiary. What is it? 100. Deduct, it's a minus or a plus? If it's a minus, you have to write minus. Don't put bracket. Because in this Excel, if you put bracket, it will take it as a text. It will not take it as a number. That's how it has been formatted. And this has been tested while I was doing AFM. So I do not want to now go back to it and all. Just put minus. So minus 100. Okay. What's next? Finance cost has been taken. Share of profit of associate. Next is what? Share of profit of associate, which is 115. That needs to be deducted or added? Deducted. It's a profit, no? So put a minus before this. What is it? Share of profit of associate. So, or you can say income from associate, simply. Same thing. So now you have been done with all the adjustments from your profit and loss. Now we are going to go to the notes. Note 1, 2, 3 and take items from there. But now the azan is going to be there, so we'll be silent. till it's over. So now the next item is what? Note 1. In note 1, it was a property, plant and equipment. So you can get the depreciation quite easily. There's only one depreciation. Sometimes you might have more than one if more than one non-current assets are there. So let's take depreciation. How much is the depreciation given? 385 added. Plant and equipment, regarding same thing only. You have disposed. So what is the gain? There's a gain. Gain on disposal of PPE, property, plant and equipment. You can write in bracket here, or you can even write here, equal to. Okay. What is it? You have sold it for 275 minus it was the carrying amount was 250. This is 25. But since it's this thing, okay, put a minus figure outside the bracket. Enter. So the moment you click here, someone can see the workings that you have done. Okay. Or you can even write here the difference, 275, and then just write minus 25. That is also okay. Now, what else? Changes in the working capital. But before changes in the working capital, we have to check for impairment of goodwill. At the date of the disposal, there is not an impairment. That's what they told. But there could be an impairment on goodwill when you have acquired it, right? So you have to work for it. Okay? We have to see whether impairment is there or not. So what we'll do, we'll leave one line, go to the next, and finish off with our inventories, receivables, and payables. Because if you go through working 2, 3, there's nothing to do any adjustments for operating activity. Okay? Go, how are you going to, this all the 3, inventory, receivable, payable, you will get it from your statement of financial position. So go there and check. And see the difference. Inventory, if you see, from 2001 to 2002, it increased 435 to 470. Okay, it increased. But remember, Okay, I will do it. I will show it here. So inventory increase in inventory. Okay, this easily you can do it here. Equal to, put bracket, because there are so many calculations. 470 minus 435. It increased from 435 to 470. Now I told you, when you acquire a subsidiary, whatever the inventory assets they have, you add, deduct, and if you have disposed of, you add it. Why? Because when you're disposing those assets, you are getting the cash inflow. That's why you add. So here for accusation, deduct minus, where are you going to get it? Which area? Look for the fair value of net assets when you have acquired it. From there you will get it. How much they have. So when you go under point 2, okay, you will say inventory is 150. This is when they have acquired it. So minus that 150. You have to add because they have disposed also. Okay, they have acquired gem and they have disposed another company, that is stone. So when they disposed, inventory was 165. This is under note 3 plus 165. Close. Press the bracket. You see, it's 50. Okay, but this 50, it's an increase in inventory. You have to deduct it as an outflow. So how do you do this? Just click here. Okay, don't do anything, just outside the bracket, not inside the bracket, otherwise it will take minus 450 minus 435. Everything changes. After equal, put a minus sign. Your number changes. Everything remains the same, only the sign changes. Okay, this is the quickest technique. Come to the receivable and payable and do the same thing. See the changes from the statement of financial position. For accusation, deduct. For disposal, add. And for accusation, you will get it from note 2, your receivable and payable, and for disposal, you will get it under note 3, both receivable and payable. Okay, so how we have done for inventory, I don't have to, I can quickly do it now. Okay, receivable has been decreased. If you see decrease in receivable, not writing how much, equal to. See, first decide whether decrease in receivable is an outflow or an inflow. It's an inflow. Decrease in receivable means your receivables are now paying you. Customers are paying you. That's why receivables are reducing. So no need to put minus figure. Just write 390 minus 330 minus. First deal with accusation, then disposal. Then add the disposable part. Plus 120. Why it didn't work out? You didn't put equal sign. That's why. Equal. You see, the moment you don't put equal sign, it will not perform the calculation for you. It's very important. 390 minus 330 minus 240 plus 120, 60. It's a plus figure. Then we are moving to payables, decrease in payables. Decrease in payable is an inflow or an outflow. Decide. It's an outflow. That means you're paying your suppliers now. That's why payables are reducing. So equal, put a minus sign and then put the bracket. And now perform your calculation. 800 minus 725. Make sure that you are understanding why I'm deducting and getting the figure, from which place you are getting the figure. Very important. It saves a lot of time. Most of the students waste time finding in the correct places where to take the figure from. Enter. 65. Sorry, it's minus 65, right? Enter. Okay, because payables are reducing. Here you don't have to put a minus because I think automatically they will show the minus. Okay, so remove the minus sign. Now what do you have to do? You will get an amount here, wait for it, and you have to deduct your interest and tax. So interest, there is no change in interest. Okay, like for accrual basis you do not have to adjust. Interest paid is the same as what you have added. That is for finance cost. Just check your finance cost. 35. This is the interest paid. If it is same as that, take. Otherwise you have to adjust using T account. Minus 35 because you have to deduct. Then comes your tax paid. For tax paid, you have to do working. Okay. For tax paid, there is a working. Now we'll not give a working number to it because we don't know in which order it will come, which working number it will be. But there's a working for it because we have some accruals, right? And finally, what you get is what? The cash flow from operating activity, which you can write it here. Okay. That's why 2 columns you need. Copy, paste. All your workings inside and main answer from the 3 activity, the cash flow will be in the outside column. Okay. Now, so we have left that one line for impairment. Okay. It's your choice now. Okay, I will give you this option. Either now itself you start working tax paid and impairment. How you can do it? I would say do it here. You can do it across, or you can use a scratch pad for it if you want to do the workings. Or you can proceed with it later, you can come and do it. Okay, but I will go by the second method. I will first finish everything and then later I can come back and do it. So let's now go, okay, to cash flows, okay, from in financing activity. Wait, just a minute. Okay. So if I didn't here, I'll be writing it here and here I'll be writing cash flows from investing activities. I will make it bold, be consistent, because I've done it for the operating activities. I'm going to do it for investing activity. Okay, so now how am I going to start? Same, go back and check your statement of profit and loss. That is the first place, and check whether do you have any profit loss, do you bought or did you dispose. But you will get this this thing. Okay, so proceeds from the sale of PPE. Or if you are not getting anything in the workings, sorry, in the this thing, go to your notes, note 1, 2, 3. In note 1, you have sold off your property, plant and equipment. So the proceed that you have sold will be recorded here. Okay, so proceeds from sale of PPE. No workings required, directly 275 inflow. Then for regarding same PPE, okay, whether you have disposed or purchased, you need to do a working for it. Okay, and when working was done, it's a purchase. We'll see why it's a purchase, but anyway, if you don't know from before, it's fine. Since I have the answer with me, okay, and working is required, so I will write W. See, later you can come and give the workings, the number 1, 2, 3, 4 like that, okay? Just now I'll write W. And it's a purchase mean it will be an outflow, minus figure. Next we have dividend that you're going to receive from associate. Dividend received from associate. You have an associate also here, right? For that also working is required. Working. Then we have what? Remember, you have acquired and you have disposed a subsidiary. That also will come here. See, very less items goes in financing and investing. So this is easier. Operating, only majority of the portion is there. Okay. So accusation of subsidiary. Disposal of subsidiary. How much you have acquired for? Just look at the consideration. But remember, it is not enough. You have to do a working here. What is the working? When you are doing for acquisition and disposal of subsidiary. From your purchase consideration, you have to deduct the cash equivalent. Right? For example, okay, when you've acquired it, cash and look at the cash and cash equivalent, because you already have cash and cash equivalent of the subsidiary. So that needs to be deducted from your purchase consideration. Even when you're disposing, cash and cash equivalent needs to be deducted. Whether it's an acquisition or a disposal, cash equivalent always needs to be deducted from your purchase consideration. It's net of consideration, whether from the purchase consideration or disposal, proceeds of disposal. Cash equivalent deducted always. The net amount only you write under investing activity. So here it will be equal to 1,500 is the purchase consideration, deduct the cash equivalent which you will get from note 2 when you have acquired the subsidiary, which is 80. 1,420, it's a negative figure. So make sure this you put in bracket and put a minus figure outside the bracket. For disposal also equal to 850 is the you have got by selling the subsidiary minus the cash equivalent which you will get in note 3, which is 50. This is an inflow, so no need to put minus figure. Okay, done. That's it. Now we are moving to the third, which is cash flow from financing activities. Again, I'm going to make this bold. Okay, here this is easier. Only the proceeds from loans or how much loan you have repaid or regarding share, there's no share issue. Okay, or dividends paid to parent and NCI, that's it. So here proceeds from loan. How much is the proceed from loan that you have got? For that, you have to go under non-current liabilities and check statement of financial position only and see your loan has increased from 300 to 500. That means you have taken a loan of 200. Okay, so when you put this 200, do not just put 200. This is what students make the mistake in their mind. Okay, they'll be like, okay, 500 minus 300, so I will go and put 200 here. How will the examiner understand how you got this 200? So that's why you have to show. Either you can write here like this, 500 minus 300, like this you can present. If you do not want to present it like this, here you have to put it equal to 500 minus 300. Enter. So the moment examiner clicks this cell, they can see the working here. Okay, it's an inflow. Next, according to, when you go to the financing activity, you have to go to the statement of changes in equity and see the dividends, both for the NCI as well as the parent. Okay, so dividends paid to parent. This you will get from statement of changes in equity only. Same dividends paid to NCI. This will take a little time for you to get the hang of it. You need to practice lots of questions. Similar questions, if you keep on doing, then you will understand the pattern. Okay. So according to this, that means there is no adjustment. You just go there and you will get it. Okay. So already they have given dividends to parent and NCR 125 and 50. Since it's dividend paid, it will be both minus. So minus 125. Minus. Minus. Okay. So for financing activity, there are no other adjustment. This automatically you can get. Okay, if you want to get it here, just put the sum function and take all the three. Whatever has to get deducted will automatically get deducted because minus is there. Enter. It's just 25. That means 25,000 from financing activity. Okay. Now, write your cash equivalent. Whether increase or decrease, we don't know. Okay. So we'll just write like this for time being. Increase or decrease in, because we have to add from the other two activities. Then only we'll see whether it's a negative or a plus figure. Plus means increase, negative means decrease. But since now we don't know the scenario, just write both. Later you can delete the one which is not correct. Cash in cash and cash equivalent. Okay, so I make sure that I drag like this and make it into this. You see, make it very presentable. If I put it like this, it does not look so good. It's falling on the other thing also. Keep everything in one column. Description in column A, numbers in column B, like that, and main answer in column C. Then your opening cash balance. Opening cash and cash equivalent. From where are you going to get? And this has to go in the main table. Here you are going to write, and here I'm going to underline it. Where are you going to get it? Tell me. Statement of financial position. Just look at the previous one, the opening one, 140. Okay. And what is the closing? Closing cash and cash equivalent. What is it in according to the statement of financial position? It is 210. So you also have to get, that means if you go back to 10 minus 140, this has to be 70. But we'll see whether it is 70 or not. If it is 70, it's correct, otherwise you are wrong. Okay. So now we have finished everything. Now what is remaining is working only. We need to do workings. Okay. And to do one working, sometimes you need multiple workings. Remember that. Okay. So now, according to this answer, since I'm looking the answer, there are 6 workings. Okay. So we'll start with the working for, start with top. We need whether there's an impairment in goodwill or not. So we'll, working 1 is goodwill. Okay. Let's keep that as working 1. I will put across only. I will write the workings across. Okay. I will write W1, working 1. Goodwill. Make it bold so that it's easy to read. Now, I'm going to drop down the 3 zeros even in the workings. Now, you start with the opening balance. Balance, brought forward balance. What is the brought forward balance? From the statement of financial position, you will get it as 1,850. And even the closing balance you will get. Keep some space and you will get the closing balance. That is balance carried forward. From the statement of financial position, you will get as 1,930. What do you need now? With your opening balance, you should always add accusation of subsidiary. How much was your goodwill when you have acquired a subsidiary? It's accusation of subsidiary. To get that accusation of subsidiary, there's a separate working. So let's label it working 2. Go in that chronological order. Rather than just randomly putting any number, this is the order. Okay? And when you have disposed, you have to deduct that goodwill. You have to take that goodwill out. So disposal of subsidiary. So for this, we'll keep it as working 3. Now you understand how the numbers are coming, how to number them one after the other. You started with goodwill because that is what you need for operating activity to find the impairment. Then to know that you need accusation, goodwill on accusation, so working 2. Then you need disposal also, so working 3. And impairment will be balancing figure. If there's a balancing figure, there's an impairment. Otherwise, no. But according to this question, let me tell you beforehand, there is a balancing figure. Like this. Okay. Keep on dragging so that it comes in one column rather than it going into. It does not look so good. Okay. So now you cannot proceed ahead. You have to go and separately open working 2 and 3. Okay. See, don't put across like this, working 2, then working 3. It does not look so presentable. Because the moment examiner sees it like this, they cannot see your working 2, 3. Like 3 might be that side somewhere hidden. They have to drag like this. Rather keep working 2 down. Go downwards. It's more presentable. It looks more better. Rather than going across. Okay, but if you want, you can do it. There's no harm. But don't put it like this. Working 1 here, working 2 here, working 3 here, working 4. Don't go like this. Then working 2. Accusation of subsidiary. Bold. I will bold it. Okay. Here, once you have acquired, how do you do? I've told you before also in Test Your Understanding 6. You start with the consideration. What is the purchase price? So you have purchased it for 1,500. 1,500,000 you can say. What is the fair value of NCI? FV of NCI. Short form I'm using it. 340. They have given already. Then fair value of net asset. Net asset at accusation. Okay, you have to deduct it. They've already given you. From where you are getting it? Note 2, right? 1490. So minus 1490. And get it. So here, equal to sum function. Take all the 3, enter. 350. 350. Maybe you can even underline it also so that it looks like it's an answer. Like this. So this is the answer, this 350. Copy, paste it here. When you copy pasting it here, you can either paste it as paste special. You can paste it as a value, just the number, or with the formula. With the formula, if you click here, you can see the formula. The moment you click, you see, it will open up for you. Even if you don't do, it's fine because anyway you wrote here, it's working too. But I always prefer to copy it with the formula. Oh, by the way, I didn't tell you about the copy paste. Okay, see when, okay, suppose you want to copy paste thing. Okay, if you paste, it will not, okay, if you, let's say you want to copy it here, paste, it will not work, it will show 0. That's why when you want to copy paste something which has a function in it, which is made of something, like this is sum of this 3. So you just cannot copy paste it like this. You have to go copy, let's say paste, special you have to click. And here you have to click. Whether you want to click just the value means only the number it will take. If you're taking the formula, with the formula it will come. We'll see with the value. You see? Click here and see. just 350. It will not show you the function. Unlike here, go up. Here you see this 350, when I copy it with the formula. I click the formula cell. So that's why you can see the formula here. There are two ways of taking it. But this, if you want, let's say this you want to copy. So this, just paste. Automatically it will paste because there's no formula. It's just a number that you have typed. Okay. So now, working 3 for disposal. Working 3. Disposal of subsidiary. Make this bold. Once you start for disposal, you start with cost of investment. Again, how many years before when you bought it, what was the price? It was for 600. So 600. Fair value of NCI. Same way. Fair value of NCI. At accusation, okay? At accusation date, not at the date of disposal. 320. They've given you. And fair value of net asset. Again at accusation. It's always at accusation only you take the goodwill. Whether you have disposed or not later on. How much? It will be minus. It will be how much? Can you take 980? That's one net asset they have given at disposal. You cannot take 980. You have to take what they have written under note 3. That net asset at the date of accusation was 730. That 980 net asset was at the date of disposal. So you have to take 730, not 980. Okay. And once you take it equal to some function, take entirely and arrow. 190. 190 is the answer. So this 190, copy paste here. It will not take, I told you. It will take this. So paste special. You can take with this one. I will just take the value. Why did I take just the value in this case? If I take the function, it will be hard for me to put the minus figure. Okay. I will show you. Paste special with the formula only. Okay. When you click here, now I will put the minus figure and see whether it's taking or not. Minus, enter. Okay. You can take it. You can take it with the formula. Just make sure that you put a minus figure after equal before the sum. Okay. Because it has to come as minus 190. Now what else? Balancing figure. How do you work out the balancing figure? You don't need a calculator for it. Just use Excel for it. When you have Excel, you have nothing to fear. Okay, equal to this minus this minus this. This you have to minus or add? You have to add. If you minus this figure, it's already a minus figure. It will add it. Minus 460. Is it minus 460? Wait a minute. No. Something went wrong. This has to be deducted as well. Minus. Yeah. Deduct everything. All the three. It has to be minus 80. Automatically, it will come as a minus figure only. So, it's an impairment. So, this impairment, don't forget this. The moment you get the figure, go and write it in the main table. Copy, paste. Copy. Here. Impairment. So when you're writing impairment, which working are you writing? Even though you have used 3 separate workings, but this impairment comes under working 1 only. So you have to write W1. Reference it like this. Referencing is very important in SBR. If you fail to reference, you will lose a lot of marks because your working is there in the reference only. Majority of the marks is there in the workings, not in the main table. Okay, so impairment you have to add or deduct. You can just copy paste it here like this. Copy, paste special. With the formula you can take, but you have to convert this to plus sign. How do you do that? Just go here and put a minus figure outside and enter. Because minus minus becomes plus. Whatever outside the bracket, if it's minus, inside the bracket is minus, so minus into minus becomes plus. It's common maths. But if you do not want to go all those things, it's very confusing. Just do one thing. When you're copy pasting it, just copy the value, or you can just write 80. You just can type 80 because already you have written under working one this is 80. So you can just write plus 80. Now you have everything. So you can do this. Here, sum function. You can take upward, downward, does not matter. Enter. It's 1200. You can take from up to bottom, bottom to up. Okay. No, there is somewhere some mistake is there. Minus 25 plus 80 minus 80. This is plus 60. Put a minus figure outside the bracket, enter. Decrease in receivable, no? So automatically you see the moment you put that plus 60, this number becomes adjusted. So you don't have to double time, you don't have to do the working 2 times. This saves time. This is why Excel. Now, for tax paid, you have to do a separate working. So we'll start with this working because you need it for operating activity, which is labeled as working 4. Because already 3 workings are over. Okay. So working for tax. Okay. And bold. Now, go to your statement of financial position and see. You are given 2 tax. One is current tax, one is deferred tax. Okay. First, you start with the opening balance. Balance brought forward. Keep some space. Balance carried forward. The closing balance and the opening balance is given already. But here, you have to add the 2 tax. Because there are 2 types of tax. If it was one type, okay. One is your deferred tax. Okay. The other one is what? Tax payable. That comes under current liabilities. Okay. So deferred tax and tax liability, that is your tax payable, that comes under current liabilities, needs to be added. That means current tax, deferred tax needs to be added. They are taken as taxation only, one tax. So opening balance, both the opening balance you have to add. 360 is the current liability plus, I will take it here only automatically like this because I have a feature of saving time. Okay, so what I do, because see if I write here again I have to take this calculator out and see how much is 360 plus 105, right? Isn't it? So why to do that? Just do it in one go. In the cell only I will calculate it. So equal to 360 plus 105. Enter. Halas, gone. Same way for carried forward. Equal to the closing balance. Current liability is 400 plus deferred tax is 150. Enter. Now in between all the adjustment comes. This is known as T account, by the way. Okay. When you have acquired a subsidiary, what is the tax? You have some tax with them, right? From their net asset. Accusation of subsidiary. Disposal of subsidiary. You might have or you might not have. If you don't have, just a slash, just a line. Don't put minus figure. Okay. Here you can put. Otherwise in normal Excel, if you put minus, it starts doing calculation. But thank God here it is okay. When you go to your note 2, Okay, you will see there's a tax payable of 40 at the end. So that 40, you have to take it, you have to add that tax with your opening balance. For disposal, there is no tax under note 3, so nothing. Then comes profit and loss. In the profit and loss, what is your tax? For that, you have to go to your statement of profit and loss. Okay, which is 225, which you have deducted from profit before tax. So 225. Okay, and the cash paid, by the way, that is how much cash you actually paid for tax, is a balancing figure always. Okay, so here also do like this. From this, or this plus this plus this minus this. Enter. 180. 180 is the cash paid. If you want to do the other way, you can do 550 minus those three things, but it's a minus figure. So outside the bracket, I will just put minus. Enter. So 180 is what I'm going to take and deduct. So this I will copy paste. Copy. Go to operating activity and write here. Paste. Special. With the formula. Okay. So now what's next? Sum function. Remember, do not deduct, because once you plan to deduct 1320 minus 35 minus 180, already it is in minus. Okay, so you have to take the sum function all the time. Take all these three, enter. It's a positive figure, 1105. Now we'll go to purchase of PPE. So you see this is 4 and then this will be 5. Always go in an order. If you see the order, you see 1, then 2, 3 is skipped because 2, 3 is needed for 1 only. Then we have 4, then we have 5. We are going downwards like that, then 6, 7 like that. Rather than just writing in any order. 1 is down, working 5 is up. You don't present it also like that. So your working is very much aligned with the order of what you have written in the main statement of cash flow. Okay, so that's working 5. And working 6 will be this. We didn't put the number before, now we can put the number. That's it, only these 2 workings are left before we can finalize our statement of cash flow. So purchase of PPE. This is a long working, by the way. Working 5, purchase of PPE. Or you can just write PPE, it's okay. In bold. Starting place, because PPE is in the statement of financial position, means always the broad opening and the closing balance. So brought forward balance 1625. Closing forward balance, just some estimate you make, okay? It is 2545. Now in between, depreciation is easy thing. So just deduct minus 385 already is given. Okay. Revaluation gain is there from your note 1. It's okay, the spelling mistake is there, but it's fine. Revaluation gain is 200 added. Disposal, you have disposed of a plant. Disposal of a plant will come here. Disposal of PPE or a plant, whatever. You have disposed it of. $250. 250 worth. Okay, the carrying amount of disposal is 250. This have to be minus 250 because there's no PPE any longer. Then we have accusation and disposal of subsidiary, because there also you have PPE under that. That's why. You might be thinking what accusation of subsidiary has to do with PPE. No, we have PPE for those subsidiaries also. So when you're taking property, plant and equipment, the subsidiaries property, plant and equipment also you are taking from note 2 and 3. Okay, that is 1 to 80 for accusation. For disposal, minus 725. And the cash paid. If it's a cash receipt means you are disposing of, but here you are purchasing. I mean, they will not tell you that you have purchased a PPE, but like this you have to find out through cash paid. Definitely, if cash paid means what? You have purchased a PPE. It's a balancing figure. So here you do like this. Sum function, add all, and minus this, enter and see. Here it works. Just take the sum function of all this and then minus with this closing balance. I will show you again. I was little quick. I was little quick in this one. I will show you again. Sum, drag from here to here, close the bracket. Don't forget to close the bracket. Then minus this one and just enter. It's minus 800. It's a cash paid. Okay. If you show here, it will be a plus sign, because then only you will get this answer. But since it's cash paid, it's a minus figure. Okay. So copy, paste special with the formula. Okay. Okay. Now what else? Dividend received from associate. It will be an income only, inflow. For working, 6. So we'll go down. The two lines are just, we have, I will write it again here. CF 2545. No. Undo what I've done. Okay, just keep it undo only. If you do the sum function, it will not come as 2545. Okay, because this has to be a plus sign in this case. Cash paid. Okay, in this case it will be a plus sign here if you do this. So do not get confused that it's not coming this. It's a plus. It's not minus here. But here when you write cash paid, it will be a negative figure. That's the thing I just wanted to clarify. I will write it here. Inside the bracket as minus. Okay. No, I cannot write minus, then it will change. Undo. Just keep as it is. Working 6. S. Dividend from associate. This will be in bold. Okay, here also you can use the opening and the closing balance from how? Balance brought forward, carried forward. Okay, what is opening balance? Tell me the opening balance. How do you get it? That too from associate. It's not in the notes. It's not in the statement of profit and loss. Then how? Work it out on your own. Okay, with this you add share of profit of associate. I will give you some time to work on it, and till then I will do the others. Share of profit of associate is already given in the profit and loss, 115. Then OCI from associate. See, profit and associate, profit and OCI you have to treat differently, okay? Is how much? 50? You have to go to your statement of profit and loss and see there. That other comprehensive income from associate is 50. And then your dividend received is a balancing figure. Okay, it will be a negative figure if you try to balance this, but in the table, main table, it's a plus figure because it's an inflow. But before that, tell me an opening balance and the closing balance. How do you get it for associate, the opening and the closing balance? It is then the statement of financial position. Statement of financial position 540, 620. Okay, and this will be simply sum of this minus this, enter 85. It will be minus 85 for you to balance. Okay, but it's okay. Copy, paste the formula. Now you can just simply perform the sum function. Everything is done. Oh, it's an outflow. Not a good thing. Now financing we have already done. So here just use the sum function again. This with the operating. Enter. You see, you have got 70. And with 70 opening balance you add and you are getting 210. So you are correct. You have balanced your statement of cash flow. You have reconciled exactly. So what did this question taught you? If I have to ask you have to reflect back on this because we are done with this question. You've in fact finished everything. In your actual exam, you will not be given this big question, but this is a very good question, and I will always tell you with the time, try to do this question on your own again. Maybe 2-3 times you have to do this because you have to do this question at a very high speed in order to check your speed and how fast can you grasp and how fast can you pick numbers from different areas. I took so much of time to do this. It's now more than an hour. I have exited because this is the first time I'm teaching you and I wanted to go a little bit slow so that you do not panic with such a big number, such a big question. And also we had to take figures from different areas. I had to explain you in between. I had to stop. That's the reason. Otherwise it will not take 1 hour. This question should at least take you, depending on the marks. Let's say if this question was asked for 20 marks, 20 into 1.8. Should take you 36 minutes only. I have taken double the time, more than it. Okay, so that's it, and we'll be doing test understanding 8 and 9, but not in Excel because they're small. Now you have got the hook of Excel. Now you will be able to do it on Excel. So keep practicing. Test understanding 8. Here you are supposed to explain the impact of subsidiary accusation on the statement of cash flow. Now This type of question also can come. Okay, in test your understanding 6 and 7, you have seen that they have asked numerical questions. They can also ask a discussion question like this. Okay, and they have asked it in the past. So just read. During the reporting, they have acquired 90% and compromised 2 firms. Okay, so they didn't entirely buy through cash. Okay, they got cash and 1 million of books own share. Okay, for example, when you buy a company, it is not always through cash. You can buy it in many forms. The shares have a fair value of 5 each, and goodwill is correctly measured and recognized at 50. NCI is at fair value, which is 7 million. Carrying amount of net asset is 20 million. And inventory was 4 million, fair value was 6 million, tax base is 4 million, all group pays tax at 20%. And cash and cash equivalent was 1 billion at the acquisition date. So now you need to explain the impact, okay, of the accusation. So how do you start? See, here they told that you are buying through shares, but they don't know how much cash you are paying to buy the subsidiary. So that you have to work out. So we are going to find out that. $1 million. Okay, I will drop down the dollar and I will just deal with the small number. So we know that, see, we are going to use the goodwill calculation, okay, because in the goodwill calculation we always start with the cash consideration, right? How much we paid to buy the accusation. So cash consideration, but this time this is a balancing figure because we have been given the information about all the other things except this. So, but we have been given the share consideration. How much is it? They told that its fair value is 5 and 1 million of shares. So it will be 1 million into $5, which will give you 5 million shares. 5 million. Now, after that, what did we do? We add NCI, add accusation. The fair value is already given as 7. So we just write 7 and fair value of net asset. Again at accusation, but this time the working has to be done inside the column, in the first column. Okay. We have been given inventories separately. There's an increase in that value. Carrying amount is, how much is the carrying amount at accusation of the fair value? 20. Okay. And out of that, you see, included in that was inventory of 4 million. Okay, but the fair value is 6 million. So you have to increase the inventory by 2 million more. That increase was not there in that net asset. So carrying amount is 20. Inventories uplift is 2 million. Only the difference between 6 and 4. And then what else? Think. This is a little bit tricky for you to come up with this. Just you need to think. Tax. When your value increases of the asset, right, you have to pay tax on that. So there's a deferred tax liability, which many of you must have missed out. And it's perfectly all right, because even if you don't get exactly the right thing, at least get some of it, majority of it correct. So what is the uplift on that 2 million, and tax is 20%. So it is 0.4 which you have to deduct the tax. Okay, so 20 plus 2 minus 0.4 is 21.6. Okay, and this 21.6 you have to add with 5 and 7. Okay, goodwill at accusation is already given. How much? Goodwill has been given as 50 million. And they told it's correctly recognized, so you don't have to doubt. This time you don't have to calculate goodwill. This time goodwill is given, go back and find out the cash consideration. So it is 50 minus 21.6, go backwards. How do you get the balancing figure? That is also a question. You add this 50 plus 21.6 minus 5 minus 7 and see how much you're getting. 59.6 exactly. 59.6. This is the cash consideration, which will go here. Now, if you want to be sure whether this is correct or not, do the revision like calculation again. 59.6 plus 5 plus 7 minus 21.6. The goodwill you have to get is 50. So if you are getting the goodwill 50, that means that cash consideration is right. Now, what they also asked a discussion question, okay, that does not see when they are give you some calculation, some figures are given, they ask a discussion question. That does not mean you only discuss, you have to show calculation and you have to use those calculation in your discussion question. That is the meaning of it, like how we have done. So now what will be the impact? You can start in any order, in any way, just think. You can maybe talk in terms of deferred tax liability it will have on the cash, or the cash consideration, you know, lots of cash. It's a cash outflow. So this cash consideration, this will start from here. This is the starting point. Okay, I'm not writing the answer, I'm telling you. It's in different paragraphs. So the first is cash consideration. In the first para you can write cash consideration. What impact this will have? Cash consideration will be shown as an cash outflow from investment. See, whenever they say impact means on the cash flow means they are telling you whether it's an inflow and outflow. Number two, which place will it go? So this will be an cash outflow going under investing activity. And when you're showing it, what did I tell you? Net of their cash and cash equivalent. That means you have to deduct the cash and cash equivalent from this cash consideration and then show the net figure. What about the share consideration? So we start by one. Okay. Share consideration. No, it's not a cash outflow. It's not a cash flow. So it is not even presented in the statement of cash flow. Okay, see, when you do not present something in the statement of cash flow, you might be thinking just don't write about it. No, you have to mention it is not there. You have to write it. So not cash flow. Second para you can write about this. So do not present in the statement of cash flow. Next, what's next? Next is the inventory uplift. You can talk about this. What about the inventory's uplift? Because of this uplift, there's a deferred tax, right? So that deferred tax will be treated as what? Part of net asset. Subsidies net asset only. Okay, that you have to write. And then what would be the net cash outflow? We told that cash consideration will be shown net of cash equivalent. So then what? So that in the investing activity, okay, there will be a net cash outflow of 59.6 minus 1 million of cash equivalent, which will be 58.6 outflow in the investing activity. This will be the impact. That's it. That's it. How long does it take to write this much? Okay, so now we will be doing the last question, that is test to understanding 9, where we'll be dealing with foreign exchange gain and losses. The last question for this lecture, test your understanding 9, which will be having the foreign exchange. So here you have been given the statement of profit and loss, the statement of financial position, and some additional information, okay, regarding PPE, carrying amount of disposal, profit disposal, depreciation, exchange gain. This is the new area. On the translation of overseas subsidiary. How to deal with this. The rest all you will be able to do it. And liberated. During the year, the company acquired 82% of the issued equity for cash consideration. Goodwill was 585. NCI is using proportionate of net asset. So you have not been given the fair value. Now you have to find the net NCI using the second method. And the fair value has been given. This is the net asset. Now, requirement is prepare cash flow from investing activity only. Has it would appear in the consolidated statement, and then explain your treatment also of the accusation of this one. So there are two requirements in one. One, you do calculation. The other one, you explain the treatment. And whenever two requirements come, first always do the calculation. Finish off with your calculation and then explain. Because then explaining is very easy. Do not waste your time to explain and then do the calculation. Calculation will take more time. So finish off the hard things first and then go to the explanation part. Okay. Now, so first we'll be doing with the cash flow from investing activity. This is a short thing. You need to label it like this when you're doing it in Excel. Under this, what are you going to do? Right. This is the reason you have to know all your three activities very clearly, and you should know under each one what falls. Otherwise, you will not be able to know. Okay. PPE. One is purchase of PPE. When you purchase non-current asset, that's an outflow. That will come here. For that, there's a working required. Working one will put the label as. Okay. Because always, whenever there is some non-current asset, how much you have purchased, separate working is there. There's a working. Directly it's not given. Then proceed from disposal. You have disposed also something, right? There's a proceed from it. This directly you can take it. Okay. What is the amount? Proceed from disposal is 854. Then we have dividend received from associate also comes under investing activity. There's a separate working for it. Okay, this also most of the time workings are required. Directly they don't give. Then we have cash consideration. Remember to buy subsidiary, but it will be net of cash acquired. Okay, so to get how much of cash, we don't know, but we know it's working 3. Okay, it will come under working 3 minus. We'll write the figure later. What is the cash equivalent? 232. This you have to minus. Okay, so at the end, whatever figure we get is the cash flow from investing activity. Now, before explaining the acquisition of liberated, we'll finish the working for the calculation. So working one is PPE. Label it like this. Okay. You start with the closing and the opening balance. I always tell like that. Statement of cash flow items start with opening and closing. From where are you getting the figure? Statement of financial position. You see this and this. So you start the opening balance as, okay, drop down the 3 zeros. 8985. And closing is 11157. Now, accusation of subsidiary. Once you acquire the subsidiary, that PPE also will come here. That you will get from the note. That is this. this 208. Then we have depreciation, which you need to deduct. It is already given here, 907. Disposal, 305. Okay, carrying amount of the disposal you have to write. So 907 you deduct. Disposal, the carrying amount of disposal, 305 you deduct. Then whatever is it is the addition, the balancing figure. But before balancing, there is one more thing which you missed out. Think, this is a foreign exchange. What about the exchange gain? You have to think why this exchange gain came from. This is regarding property, plant and equipment. For this, we have an exchange gain on translation of overseas subsidiary, 138. That has to be added. That has to be added with this because it is regarding property, plant and equipment. So that exchange gain, here I can put. No, before, okay, here, exchange gain. 138 needs to be added. So add all and then deduct it from this closing balance. The balancing figure is your purchase of, that means that is the cash that you have paid to purchase PPE. That is 3038. This 3038 is a cash outflow. 3038 outflow in bracket. Then we have dividend received from associate as our working 2. Here also you start with the brought forward and the closing balance on statement of financial position, which is here 280 and 300. Okay, and when you go to the profit, income from associate 30 needs to be added, and the balancing is your dividend received. So it is 280, 300, profit or loss is 30. So 10 is your dividend received. Balancing figure. Okay, so cash received, it's an inflow. So you write 10 here. What else is left? Working 3, purchase consideration. Okay, so here when you start, cash consideration is your balancing figure because you are not given that. Then NCI at accusation. This time you are not given the fair value, you have to find out proportionate share. Proportionate share means you have purchased 82% of shares. So NCI is 18%. Multiply by your net asset. Net asset is 833. This one. This 833 on this 18%. Because you have purchased 82% share. So the balance is NCI, which is 150. And then we have fair value of net asset. Again at accusation. It's 833. Goodwill has already been given to you, which is 585. So go back, 585 plus 833 minus 150 will give you 1268. This one, it's an outflow. Okay, so here when you go it's 1268 minus this 232 cash equivalent, which will give you 1036 as an outflow, and the total amount will be 3210 an outflow. Okay, now we are going to the second part where we have to discuss the treatment of accusation of liberated. Okay, so if you see, liberated was acquired for how much? Just now we found the cash consideration, 1268, right? And it's an outflow. So you have to write it's an outflow. It comes under investing activity. Okay. And also you have to write that cash and cash equivalent of 232,000 are controlled by group. So it's a cash inflow. Okay. So therefore, in the consolidated statement of cash flow, you have to show the net impact, the net cash impact, which is 1036. So basically that's what you're writing in the words. That's it. So that's it. Now let's summarize the whole lecture, IAS 7. So now let's summarize everything. We have started with the objective of statement of cash flow, which I didn't include it in the lecture, but it's an assumed knowledge from your financial reporting that shows that the main reason why cash flows are there is to provide information on changes in cash and cash equivalent. And number two, it enables users to assess what is the liquidity of the company or solvency, financial solvency. Because through your other financial statements like statement of financial position and statement of profit and loss, you cannot figure out what is the liquidity or what is the solvency of the company, how financially solvent the company is. Neither you can get the information on changes in cash. That is only possible through statement of cash flow. Hence, we provide this statement. Then you need to classify a statement of cash flows into three groups: operating, investing, financing. Operating, all your trade activities, main revenue you generate is from operating activity. So make sure your operating activity has to be positive and big amount. Investing is where you invest in non-current assets, or if you buy or dispose your subsidiary, associate activities, those cash flows are there. And financing is how do you finance through equity and debt, by taking loan, by issuing shares. Then we went through some interest and dividend paid and received. Accordingly, you have to decide whether it's a operating, investing, or financing. Then we went through the preparation of the group statement of cash flow. We went through three things. One is cash paid to NCI. Then associates, where we take their profits, where we take their dividends received from them. And then acquisition and disposal of subsidiary and associate. Because to acquire them, you have to pay cash. To dispose, you will be receiving cash. Whether it's a subsidiary or whether it's an associate, it's taken in the group statement of cash flow. Then we went through foreign currency transactions, the last. Here, exchange gain or losses must be taken into account. You cannot ignore it. And then evaluation of statement of cash flow. How do you evaluate? It provides information that is not in the statement of financial position and statement of profit and loss. And it shows relationship between profitability and cash generating ability. So that's it for this lecture. Thank you for watching and see you in the next lecture where I'll be discussing IAS 8. IAS 8 is the next standard. Make sure that you do the questions which I've skipped. I think test understanding 1, 3, 4, 5 I didn't do. So do it on your own. They are basically just introducing you to how to calculate dividend received from associate or all those things. I've already shown them through a bigger question. So make sure that you do enough of questions, and also not just the calculation, discussion question on this IAS 7. All the possible questions from revision kit. So see you in the next lecture, and thank you for watching. And don't forget to subscribe if you have not subscribed to my channel yet.